Alright, hello everyone, and this is Gape, the author and owner of the GPFx SMC EA. So in this short video I will be showing you or taking you through everything that this robot is about. I'll be making a user manual. It's supposed to be short and brief, so I will walk you through the inputs of the robot, so that if as a person you want, as a trader or as a customer, as a buyer, you want to play around with the settings of the robot, mess around with it a little bit and adjust it and fine-tune it to your preference, so you will know what you are dealing with. Anyway, okay, let's begin. So this EA, this robot, it operates on two strategies at once. At the same time. So this is the robot. So first of all, to install the robot on your chart, you go, assuming you've managed to install the robot. If you haven't managed to install the robot in your laptop, you can watch the previous video. I will link the installation video in the description of this video, so you can learn how to install the robot on your laptop, on your trading terminal. Now, once you've managed to install the robot in your laptop or your trading terminal, then you can watch this video to learn how to use it, how it works, so you can be able to interpret its signals, its trades, and you can also learn from it as it is trading. The robot is fully automatic, but doesn't mean you wouldn't want to learn as it's trading, so you can understand and get a brief, just an idea of what's happening as the robot is trading. Okay, now assuming you've installed the robot, you go to the navigator, and under this tab to load the robot on your chart. Okay, let me just quickly close this chart here, and let's open the market watch, and then we load our chart on the terminal where we want to load the robot. Okay, so what we do, these are just trades that the robot has executed. These are all automatic. This was a win, this was a loss, this was a win, that was a big win, this was a big win as well, this was a big win as well. It's a real account. I trade real accounts. My robot works on both accounts, real or demo, doesn't matter, as long as it recognizes the account as Okay, let's begin. You load your chart, you open your chart here, and then what you do, drag the robot into the chart, and then you'll be presented with this. Oh, I'm sorry about this picture, by the way. You'll be presented with this tab, with this user interface, where it will show you so many options that you probably wouldn't even understand what's going on here until someone explains it to you. Now, the first thing you have to do is tick this box so that it can trade. It can open trades automatically. Now I will walk you through the inputs. The first input is the trading strategy. The robot operates on two strategies. The first one is the SMC OBs. You can switch between this strategy and this strategy. This is the ICT Liquidity Runs strategy. I will explain both of them in detail as I load the robot and let it mark the charts. And now I have a feeling this video is gonna be very long because I'll have to explain all of these, everything to the finest detail, that is. Now, this is the first strategy, SMC OBs, and this is the second strategy, ICT Liquidity Runs. How the robot operates, this is how it works. If you have the strategy selected, SMC OBs, it looks for let me just tick it and show you as it's marking the chart. It will look for order blocks where there was a breakout of, like a trend change, and the market retraces to the order block. Let me, like here, you see there's this, you see it has marked this order block here, 6-hour order block. Oh, there's so many trades, by the way. A 6-hour order block. You see this is an order block, huh? Break of market structure down. It will look for a break of market structure down and look for an order block. This is an order block. This the candle we call an order block here, where we would expect the market to reverse. Yes. Now it will mark this zone, and then when price reaches the zone, that is just the SMC. Okay, let's go back to. First off, it will look for a low and another low, lower. This low has to be higher than the previous low, and then draw a trend line. And then when price breaks below that low, and then when price breaks below the trend line, that is, and then when price also breaks below this low here, it will mark this break of market structure down on the 6-hour time frame. It works on all time frames. It will mark this break of structure down, and then mark this trend line as well, and then also mark the 6-hour order block. This is the 6-hour. This is an example of a 6-hour time frame. It works. It's the same concept in all time frames. Now, when price reaches your, the order block that has been marked by the robot, that is here. The bot itself will look for an entry. What kind of entry? It will look for an entry in a small time frame, a 1 minute, 2 minutes, 3 minutes, 4 minutes, and 5 minutes time frame. That's the highest it can go. Why am I doing this? Why is it working like this? We want sniper entries in the sense that we open a trade with the 1 minute time frame. Nah? Suppose we get a trade at the 1 minute time frame. Our stop loss is usually, in this case, this is what the robot would do when the price is at this moment here. It will mark this higher high, this higher low, and it will mark at this break of market structure down here. A similar concept, but for the entries we do not use order blocks. We use a fair value gap imbalance. We use a fair value gap. Then it will mark this fair value gap here, this imbalance here. This is where it will open a trade when the price reaches the fair value gap. So you will get a sell here. You will get a sell signal here. Not a signal. The robot will actually execute a trade here when this candle closes. The candle that has tapped into this imbalance, this fair value gap, you will get a sell when this candle closes. So that means is when this candle opens here. You get a sell here, and then your stop loss is above this high here, the high before this fair value gap. You see, there's a high here, we have a low here, that's the high, that's the low that we broke. So it's the high that comes immediately after this low that we broke down below, and then the stop loss will be at this high, above the high. That's roughly where your stop loss would be. You see, there's a small stop loss for a 1 minute entry. The take profit is very bigger, is I mean it's much bigger than the stop loss, because the take profit would be this from where we broke here up to that low here. We would target from this our entry here. We will target, oh no, I want a Fibonacci too. I want a Fibonacci. Oh boy. Let's make a more hard. You target 50, I mean no, it's actually 75% for the SMC OBs. The target is 75% Fibonacci level from that low. So 75% in this instance is going to be like 25%. I started this Fibonacci is inverted, so it's going to be like this. That's the zero level at our entry. I mean up there, the highest high before our entry, and our target would be at Fibonacci 75 level. It's somewhere around, okay, let me add a new level, or let me just, okay, delete. I'm just gonna edit this level here as 0.75, the 75% level. Alright, yeah, this is where the take profit would be. So you have this big risk reward. You entered a trade here, yeah, your stop loss is above this high up there, and your take profit is at this 75% level. You see, that's 640 pips, I mean 62 pips, risking only about 3 pips to get something like 60 pips. So that is 1 to 20 risk reward. That is how SMC works. You enter on a small time frame, your stop loss will be small, but your take profit, you set your take profit looking at the analysis on the big time frame. So when the robot opens a trade with a 1 minute entry inside a 6 hour order block, when you open a sell here, we use the 1 minute entry trigger to calculate the stop loss and the lot sizes and the risks, but we use the 6 hours higher time frame to calculate the take profit. That is how you use sniper entries to get 1 to 20 risk reward, 1 to 10, yeah, you know, like very good risk reward, because you use a smart money concept. That is how the smart money the smart money concept works. Low time frame entries and big time frame order blocks. That is how you use smart money to maximize your profits, and also while at the same time reducing your losses. Now, why am I telling you this? All these options, you have to enable them under the inputs tab. Oh, the take profit will be calculated using the big time frame analysis. So sometimes, like in this example here, I think it was shown here, you can see here, look at the history of these trades here. Okay, here it wasn't a win, it was just a break even. Look at the history. You can see here the take profit was $19. Here the loss was $5. Here the take profit was 13. Here it was $7. The take profit will differ depending on the time frame where you've picked up an entry. Now, the stop loss will be, I think it will be close, is relatively close, similar, but the take profit will be different. It depends on the time frame where you get your analysis from, using the SMC strategy, the SMC OBs. there is multiple time frames. Now the inputs, now you select a strategy here, SMC. Now the second strategy, let me just get done with the strategy input first. The second strategy is the ICT Liquidity Runs. Yes. Now this is how this one operates. Let's switch time frames so it can initialize. Switch time frames so it can initialize. It will look for areas of liquidity. What is liquidity? Liquidity means areas where there will be stop losses. The same way, this is not my concept, this is ICT's concept. I've even mentioned it here. It's ICT Liquidity Runs. It looks for an area where there is liquidity, meaning stop losses. So it will look for a liquidity here on the 1 hour time frame. You have a high, a previous high is buy side liquidity, and a previous low is sell side liquidity. How the market operates, it will, you see, this is 2 hours buy side liquidity, this is 2 hours sell side liquidity on the 2 hours time frame, because that is the previous high, and the 2 hours time frame, this is a 4 hours liquidity, because this is the last high in the 4 hours time frame. This is a 4 hours sell side liquidity. It operates on multiple time frames at the same time. Now, how does the market run? How does the market trade using the concept of liquidity? You have when you have a zone and like an area of liquidity, like on the 1 hour time frame, like here, we have a high there where we know what if a person sells, if you have a sell here, your stop loss will be above this high, right? How the market does it, it will run above this liquidity here, buy side liquidity, and then run into a sell order block in the 1 hour time frame. This is a 1 hour sell order block here. Then when the price gets here, we look for an entry in the small time frame. When price in the opposite is equally the same. When price runs through this sell side liquidity in the 1 hour time frame, it runs into a buy order block, 1 hour buy order block. You can see it here. And then when it gets inside this 1 hour buy order block, we look for a buy entry trigger, which I will also explain in the small time frame. And I hope when I get to explaining it, there will be a setup that will be presenting, so I can explain it in real time. I'm sure there's going to be a setup, so it will be much clearer when I explain it with some sort of a demonstration as the robot trades. Now, how the robot operates, it will mark the charts and then it will wait for price to reach those designated areas where those target zones, those order blocks, we want price to run through liquidity into a zone, into an order block. Then we can look for entries in that order block. This is a buy side liquidity 2 hours in the 2 hours time frame. It's run past that liquidity, but in the 2 hours our order block is way up there, because all these order blocks here, they have been retested. They are not that efficient. We want only the order blocks that are efficient. But here we had a run through this 4 hour liquidity. I mean, actually in the 2 hours time frame, you can see there was a high here. This is in the past. It's just an example. There was a high here. We ran past this high into this 2 hours sell order block here. Then price gets inside this 2 hour sell order block here. Then we look for an entry here, sell. You can see it sold off for 2 hours, 4 hours, 6 hours. And our take profit with the ICT liquidity runs is 50% instead of 75%, because we want to exit our trade at the equilibrium between the premium and the discount. Our take profit is 50% between the low and the high. I mean, this actually, I'm just explaining what the robot will be doing. Everything is entirely automatic, so you will learn as it's operating. The take profit is at 50%, which is the equilibrium. You know, the premium is the up there when price is trading higher, and the discount is when price is trading lower. We want to take it from the premium up there when it's at the premium, when it's overbought in the retail perspective using indicators. We take it from the premium above the 50 to the discount. If discount is 50 and below, we take it to the equilibrium. We don't want to go anywhere below the 50. At 50 we are out. Sometimes it will go way beyond to the 100, but this is far much bigger profits because we will be opening our trades with the 1 minute time frame or 2 minute time frame. Let's look for an entry. Let's see if it found an entry. This is the sell order block. You can see it right here. How does it look for an entry? Remember I said when price gets to this area here, we will look for a low and a lower high. I mean a higher low. Let me show you. This is the only indicator that we use in the robot. Okay, there is only one indicator that I use just to show me the highs and lows. This is an indicator for price action. It's not an indicator for using values like stochastics, volumes and stuff. It's an entirely price action based robot. We do not use indicators. Now it will look for a higher low and a breakout below that low. It will draw a trend line. This will all be happening in real time. You'll be seeing the magic as it happens. It draws a trend line, and then price breaks below the trend line, and then it just casts the trend line to exactly where the price broke below. And then you'll have a breakdown below this low. This condition, we call it a shift in the market structure. It's a breakdown. It's a change in the character of this, like the market structure change. The structure has shifted, and then from the moment this scenario occurred, before we broke below here, we are going to look for an imbalance, a fair value gap. A fair value gap is an area where there was just the price was just pushing down. This is the big candle here. It's made up of 3 candles. It's this zone here. Let me feel it. Fair value gap is made up of, this is the, oh, let me make it into a background so it doesn't actually, yeah, this is the fair value gap, an area where there was totally a bearish movement down. There was no buy. The price was just selling off, meaning it was making it was creating a shift in the market structure. We are going to only trade the fair value gap that is above this low here that we just broke out of. We just broke below it. Now that's when price reaches the fair value gap, that is when we will open a trade, and then the stop loss, price will open a sell when this candle closes. Why when this candle closes? Why am I not entering on a retest? Why am I not entering on a retest? I'll explain that in a few. It will be when this candle closes here. So it will be when this candle opens. That's the entry. Then our stop loss will be okay, let's just do this a little bit and then break it down, and then our stop loss will be up here above this high, the high that comes subsequently, immediately after this low that we broke out of, and creating the market structure shift which had imbalance. Yeah, is a straightforward concept. Anyway, our stop loss will be up there, yeah, and when price taps into this imbalance here above this high here, it has to tap above this high here. When price taps above this high here into this imbalance here, we sell. We don't sell immediately when it touches it. Why? Sometimes price will not tap, the price will not only tap the zone here, it will break out of the zone here and close above it. That is an invalid setup because it shows a break, it has filled the imbalance. It has, when it breaks above this high here, yep, right here, when it closes above it, it's an invalid trade. If it taps into the imbalance and just plays around here, it's a trade because it has not broken above this high here, which caused this. This was a block of orders, by the way. This is an order block here. This candle here is the order block. It caused this big momentum down, this big push which had a fair value gap. Now it goes in and taps into the fair value gap with an attempt to fill the fair value gap. But since the fair value gap is strong, it's usually strong, you get a rejection from it. It comes back at a later date here to fill the fair value gap entirely. You see, it's filled the fair value gap entirely, and look what it does. It closes below. See, it fills the fair value gap entirely. This candle doesn't close above it there, meaning that is a very strong fair value gap. That's a very strong order block where you expect price to sell because it did not close above the fair value gap. These are the conditions that are there in the robot. These are the conditions that are there in the code. It's a lot of criteria. It's a lot of code. This is like 84,000 lines of codes, decisions, selections, filters. These are all, I can just show you a snippet. See, just the code, multiple time frames. So everything is entirely automatic. All these things that I'm showing here, they are happening real time as the price is delivering. Yeah, as the price is being delivered. Every candle, every tick, the robot is operating 24/7. Okay, there's our entry here, and our take profit, remember, is here. The way I learned it from my mentor, the owner of this, the owner of this strategy. That's why you see how I'm emphasizing this owner part, because he is the real owner of the strategy. I'm just a student, a smart student, by the way. The way he does it, he will look for the 50%, the equilibrium, and look for a fair value gap. Since he trades manually, he looks for the fair value gap at the equilibrium, and that's why his take profit is going to be automatically. This time around, there was, this is a coincidence that there is a fair value gap at this equilibrium. I don't know if it's a coincidence or what. Maybe he will say otherwise, I don't know. But coincidentally, in this example here, there is a fair value gap at the equilibrium. This is where he would exit his trade. This is it's called internal liquidity. Yes, that's why he'd exit his trade here, below this low here. This is a fair value gap below. This is an area of liquidity because it's a low where there will be buy stops below here. It breaks below this low here into this fair value gap, takes out all those stop losses, or those trailing stops. There will be sell stops here, not buy stops. These are those sell side liquidity, and then buys up again. That is how the price moves. And then when price comes into the zone here, you can see comes into the zone, takes out the liquidity here, yes, fills the fair value gap, is below the 50% line, Fibonacci 50%. It fills the entire imbalance. This was where there was imbalance. There's a little bit of imbalance here as well, but it's not that strong. But since it's at the 50%, that is where our take profit would be. So our risk reward here in this instance is going to be, we enter here with a stop loss of 60 points. and our take profit would be, since there's our entry, take profit is 250 points, 6, 12, 18, 24. This is 1 to 4 risk reward using a 2 hour fair value, a 2 hour order block. You see, this is how the robot analyzes 2 hour buy side liquidity, break out of it into a 2 hour order block. We sell there with a 1 minute entry, take the sell all the way to the 50% equilibrium. It is a lot of processing, calculations, analysis, the lot sizes, the risk rewards, everything is entirely automatic. We'll get to that part as well. Get an entry there. This one has a perfect entry. Get an entry here. If it hasn't found an entry in the 1 minute time frame, this is what's going to happen. It looks for entries in 5 time frames: 1 minute, 2 minute, 3 minute, 4 minutes, and 5 minutes. To look for entries in all these time frames. In the 2 minute time frame, same thing. It's actually similar. Breakout, fair value gap here. It taps into it here. There's the sell. 2 minutes, the same. 3 minutes, breakout here, fair value gap here. Once it taps here, once it touches this fair value gap here, you see it closes inside this. This is the new fair value gap in the 3 minute time frame. Here, closes inside it, not above. It's not above this candle. It closes in this fair value gap here, within this range of this candle here. That's the sell. It sells immediately right here. Stop loss, same thing above there, and then take profit all the way there. Once it finds an entry in a time frame, like a single time frame, let's say 1 minute time frame, it finds an entry. This time it was going to find an entry, an early entry. The first entry was going to be in the 3 minute time frame. Once it finds an entry in this 3 minutes time frame here, it will not open an entry in the 1 minute time frame, because it doesn't that way. Because if it does that, if it opens trades in all the time frames, it will over leverage your account, and it will not follow the risk management, which is the core subject, which is the most important thing when trading. Risk management. If it opens trades per every signal, even when there are more trades already opened, the account will definitely either blows or it gains, it multiplies, exponentially, very, very quickly. But that option, I haven't, that's not how it works. We open a trade using a time frame, an entry, and then once you get an entry in that, we don't get greedy. We hold that trade up until we get to the take profit. We will break even, we will trail. I'll take you through those options. Now we've covered the ICT liquidity runs strategy. We move on to, I hope I'm still recording. Okay. Wait, let me, I'll do a pause. Okay, looks like I'm still recording. I'm at 30 minutes right now. I think I've done the introductory part of this robot. I've explained how it works. That's the good part. That was the thing that was going to be the longest part of the video. We move on to other inputs now. We've done with the SMC and the liquidity. If you were to ask me for my personal preference, sometimes I would turn them both on, these strategies. You can leave them on at the same time. Since I'm the author of the robot, and I prefer testing both of them to know which one I should keep, or which one I should modify, or which one I should just discard if it's not performing. I use them both, but I prefer the ICT Liquidity Runs because it is an institutional way of trading. I know SMC is also similar to ICT. SMCs, if you follow ICT, the SMC OBs, This is just the term. I don't even know how I came up with this. It's not my term, obviously. The way ICT calls it, he calls it the ATM method. So this is our credits to Michael J. Huddleston, the most brilliant trader I know. Yep. This is all his work, his content, his discovery, I appreciate him very, very much. This is all his work, his strategies. SMC is actually the ATM method under the ICT. Is in his channel. I will link his channel in the description. And the ICT Liquidity Runs is also his work. These are all his strategies. I would recommend for you to learn about them in his channel. And if you need further clarity, you can contact me for the copy of the robot, what and what not, and then you learn from the robot as it's trading now. Okay, that aside, now we go to the basic inputs. There's this first input. Trade for me is just you turn it on and off, true or false. If it's true, the robot will trade for you. If it's false, the robot will not trade for you. It will only send alerts, but it will not open trades automatically. Start trade hour and the end trade hour, you can set it here. If maybe you want to trade at night only, you can come here to 00 to 06 a.m. You know, it will trade only from 12 midnight to 6 a.m. You can go from 00 from 12 midnight to 8 p.m. in the afternoon, or you can trade the whole day by just selection from 00 to 00. That is how you set it to trade. If maybe you want it to trade when you are at work, and then you want to only trade for yourself when you're at home, and then this way it will not trade. It won't do anything. It will just shut down. You won't trade. You won't mark charts. It won't do anything. It will just shut down, and then you can take over. But if these numbers are the same here, it will trade the whole day. Now the next part of the inputs. This is the next input. Risk percentage. Risk percentage of free margin. SMC. Pardon me. Since we have two strategies here, we have SMC. I'm going to emphasize this. We have SMC OBs and we have ICT Liquidity Runs. Risk percentage of free margin. This is for the SMC OBs. This is for the ICT Liquidity Runs. What this means, this is the most important calculation for risk management. This is a percentage here. This is not dollars. This is not the currency symbol. This is in percentages here. Risk percentage of your free margin. If this is 5%, if it's 5% like it is here, it will risk. Jesus, how do I go to? It will risk 5% of free margin here. This is free margin. You know, free margin it doesn't stay the same. When you open a trade, the free margin changes. How can I even open a trade here? That's the minimum. When you open a trade, you see the free margin has decreased because the risk the risk percentage. It will risk based on how much margin you have, not how much money you have in the account. Yes. Why am I doing it? Why is it doing that way? Because free margin, if we risk using balance, take a situation where you are in a trade and you are in losses, you are in drawdown, so your equity is much less. Let's say you have $10 and you are at 10% loss. I mean, you're at $10 loss, so your equity is $10. Your free margin will be around $10. Equity it will be equity minus the margin that was used to open trade. So it will be like for $7. It will use that $7 margin to open a trade, not $20, because if it uses $20, it will draw you into far much drawdown, and the account would maybe blow, or I don't know, suffer drawdown, close some trades when the market breathes before it even hits your stop loss. That's how we prevent for the account to blow even when you are in a potentially profitable trade. It risks the free margin, so it risks a percentage of the free margin. Now when it's 5% like this, it's 5% of $20, which is I'm just gonna do the calculation. I don't care. I'm gonna pull up a calculator. 5%. How do I even do this? 5 over 100 times $20. What? It's a dollar. Wait, what? Yes. Oh, okay. Yeah, it's actually $1. So it will be risking roughly $1, either 90 cents or $1.2 per trade. It's around that zone, that level. So your stop loss will be around $1. Your take profit will be at this level, this equilibrium. It's not fixed per risk reward for now. At this point in time here, at this point in these inputs, the take profit is flexible. It's based on the equilibrium, the 50% of the Fibonacci. That is where we place our take profits. Same thing, you can use 10% risk here, you can use 5% risk here, depending on how confident you are with the strategy. If you are testing, if you've noticed the SMC is much more profitable, then come on, why not just exploit it if it's profitable for you. If it's not, you can turn it off here and just focus on the liquidity runs. This has to be at least 1%. It can't be 0% because it's not going to open trades in that way. When it's 0%, it won't open trades, obviously. So now going on to the next one, break even expert. This option here, break even, means moving your stop loss to entry when you are in profits. So when a trade is in profit, but this one here, I've set it to only break even when we are halfway from our take profit. I don't want a scenario where we will break even and be taken out of a trade, and then before the market could actually go into the desired direction, and then it goes and smashes the TP after taking us out at break even. I'm trying to avoid those instances. I can't completely avoid those instances, but I can try and reduce those, because what I've learned is if you break even too early, you are scared of your analysis. Obviously you are scared of the market and you are not confident in what you're doing. That is a fact. I know you can't be 100% confident, but you've got to give yourself a chance and give yourself, some trading, some room. You must have a bit of confidence in yourself. When you are confident that your strategy is profitable, you don't even need to break even. Actually, I've just turned it on years because I'm a human. When I'm in profits and then suddenly I've suffered a loss instead of a profit, that's gonna cut deep. Of course, when you are risking a lot of money, I usually turn it on when I'm going to like 50% risk. Yeah, sometimes I can go bananas, I can go berserk, and go like 25% risk of free of total margin in the account. Is very risky. That's when I want to make money fast or lose money fast. But for now, I just use 5% risk. It's good for me and it's profitable. When you have like $100 account, you can make $100 in a day when using a small risk. 5% risk means you have to lose like 20 trades before your account can blow. And even the good part is it won't even be 20 trades, because it will only risk 5% of what's been left in the account. So the account may keep decreasing, but it won't go all the way down to like 0. That would be a money blowing robot. My robot has a very good win rate, that one I'm confident in, and is very profitable. My robot is profitable. It has losses, I know, but it's profitable, isn't it? Isn't it profit? That's profit. My robot is profitable. I make withdrawals. Yes. There are losses. Yes, which I embrace. I embrace my losses. I don't think about changing anything. I embrace those losses because they make me a better man. I get to understand why this was happening. Sometimes these are stop hands. Market just hits your stop loss and then goes into your direction. There are stop losses, there are wins, there are losses. $9 loss, $10 win. But at the end of the day, we are profitable. That is what matters. Sometimes you can go into a winning streak. Sometimes you can go into a winning streak. Just look, that was a rampage, wasn't it? Sometimes you can go into losses. Sometimes you can go into profits. It's just a matter of risk management. Your wins have to be bigger than your losses. That is how, even when you lose, you'll make profits. That is how it is actually. Okay, I've left just a small account just for the purpose of demonstrations. Properties. We are at trailing. Now trailing, we break even at halfway towards our take profit, and then trailing stop will trail every 25%. Yep. No. Break even at 50%. I know when you've turned on trailing, it will break even early and trail. But when you have break even off, and just trailing like this, it will break even at 25%. Then at 50%, it will move your stop loss to 25%. Then at 75, stop loss will move to 50%. And then at 100, we've hit our take profit. If it's just break even, not trailing, so that means at 50%, we'll move our stop loss to entry, and then we'll hold until we hit our 100% take profit. That's how it is. If they are both on, it will just break even and trail at the same time. So it will protect your profits at 25% intervals from your take profit. Now, this is the interesting part as well. This is, oh my goodness. Yeah, I know. I've taken all factors into consideration. I know. Risk reward. If maybe you want to scalp, or you don't want to use Fibonacci to hold your trades, you don't want to hold your trades to like Fibonacci 25% level, Fibonacci 50% level, Fibonacci 75% level, which have already been set in the robot, you can change these options. If you want to scalp, if you want your take profit to be equal to your stop loss and just scalp, you can manually set your risk reward here. If you feel like holding for a long time, it just isn't colored for you, you just set your risk reward here, and the robot automatically, it will check before opening a trade. It will check here, have we set a risk reward that we want? If we have set the risk reward, then we will use the risk reward here. If it's 1, it means if our stop loss is $2, our take profit will be $2. It's 1 to 1. If it's 2, if our stop loss is $2, our take profit will be $4. If it's 10, it's 10 times the stop loss. Take profit is 10 times the stop loss. This is a fixed risk reward. It doesn't matter whether you are on a 1 hour time frame or on a 2 hours time frame. As long as you've set it here, as long as you've configured it here, or you want to use this much risk reward, That is what it will use for calculations of the take profit when opening a trade. So if you don't want to mess with the take profits, if you want to scalp, just turn on 1-to-1. Trust me, you just need to leave the break even on here at the trade. I don't know, you can leave them on. It will break even at half of this. When trade is 0.5 away from your take profit, it will break even at trade and doing all of that sort of break and trading. But if you don't want to scalp, if you want to use the Fibonacci levels, the institutional way of placing take profits is actually that. Yeah, that's the institutional way. We go for the premium, just leave it as 0. When it's 0 like this, the robot, the calculations here, it checks for, have you set your desired risk reward here? Let me show you. I think it's gonna show here. Where is it though? So it will check, is our risk reward 0? Oh, actually it should be oh boy, let me just reset. 0. If it's 0 here, is it 0? If it's 0, then we will use the Fibonacci using the 50%. This is Fibonacci 50% of the high. These are just calculations. Those are taking those extremes and dividing by 50%, looking for the equilibrium. But if there's a structure of the code, if it's not 0.0, if we set risk reward to like maybe 10 or 1 or 2, we'll use that risk reward here to calculate the take profit. That's how the robot will make that decision to trade, to place you where to place your take profit or your stop loss. And then moving on, I know I'm exposing my work. I know. Why am I even showing my code though? Oh, Mudim Mohammed, this is a long video and I am tired. Okay, moving on, we move on to the colors of the order blocks here. This is where you set the colors. Depending on the background you have, you're gonna have to change the colors. It's entirely up to you. This is all. These colors, trend line colors, these ones are for entries. Those small time frame entries inside these big time frame order blocks, these are where it's just colors. This is just graphics, so you can see, you can decide here to fill the order blocks with color or to not. What the hell? Not to. So now, yeah, this is the engine part of the robot here. This is the engine part of the robot, where most, it's the same. It's basically the same. I only explain one part, and then it's the same for all time frames. Now, we have a section for 10-minute order blocks. If you want to trade 10-minute order blocks using both strategies, okay, turn them to both. But using ICT Liquidity Runs, to turn to ICT Liquidity Runs, and then leave it here as 10-minute order blocks here. Then it will look for liquidity runs at the 10-minute time. It will use a 10-minute time frame here. Look for the order blocks here. This is when you want it to label your order blocks here with text. You don't need to hover over them. There will be text inside them. And then let me just click OK. Let me just show you. Why is it not? Oh my God! Wait, just to reinitialize gone. And then I can check the 10-minute time frame and look for that. This is gonna label the buy order block as it is. You see, it's gonna label it with text. Yes. That's the buy order block. Where is the sell order block though? I don't have a sell order block. Okay, that's weird. That's funny. I know it's there. Okay, it's not there. Doesn't matter. It will label it. This was a buy order block here. Do you see what happened here? Price came straight into the order block here. This was a 10-minute buy order block. Price came into the order block and gave us an entry. Did it though? If it gave us an entry, breakout, fill the fair value gap, or here, breakout, fill the fair value gap, and then continue. That's if it gave us an entry trigger and the 1 minute entry. And then there's another option. Moving on, we have alert on the retest on the order block when price touches the order block here. Oh, my team also. When price touches this order block, or is it here? And here, it will give you an alert or a touched or the price has reached an order block. That's a retest on the order block. And then this one, entry confirmation. All these ones are there. Even when you have them on or off, they are not important for now. There's no code related to them at the moment. But these are our entries. M1 entry, M10 OB. That means, what that means, it's a 10-minute order block like this one. Where did it go? It's gone. Okay. 10-minute order block. It was here. I don't know what's happening. It was a 10-minute order block here. And we'll look for an entry in the 1 minute time frame, like I did. You come here, look for this breakout, fill the imbalance, the fair value gap. We don't have an entry in the 1 minute time frame, so there's no entry in the 1 minute time frame at this moment. If you've only set the robot to look for an entry in the 1 minute time frame inside a 10-minute order block, it won't open a trade in this order block. If the 2-minute entry is on, then it will at the same time be looking for an entry in the 2-minute time frame, which will be here. Remember, this is the 10-minute order block, right? This is and this is the breakout right here. This is the fair value gap. Do you see how this pattern or how this behavior repeats every single day? This is the fair value gap right here. When price closes here, it will take a buy when this candle opens here. Then place the stop loss below this low here. That's what the stop loss would be. And they take profit using this SMC. This is SMC order block. I know why I'm saying that. It will go to the 75% in this instance. Okay, let me invert it. When you invert the Fibonacci, it will be 25. It will be like this, and that's what the TP would be right here. So that's 32 pips, 30 points for 90 points. So that's 1, 2, 3 risk reward, because we are using a 10-minute buy order block. Oh, I hope you understand. Please tell me you understand. If you don't get it, you'll go through the video all over again. That's the good thing about videos. You can always replay them. Alright, and then moving on, going on towards the same thing. 3 minutes, same thing. Entry in 3 minutes, 4 minutes entry if it's there, 5 minutes entry if it's there. You can turn them on or turn them off. In this like a 10-minute order block, I would usually take the first three, because they are small, I can get an entry. They are more like proportional compared to using a 5-minute entry inside a 10-minute order block. You will get like a big stop loss but a small reward, small take profit. So it will be like it will be illogical to have a small take profit but have a big stop loss. That will mean like, in overall you might actually end up closing your day in losses, because your risk is bigger. I mean, it's small. Yeah, it's bigger than your reward. So in that case, you might be in losses. Anyway, moving on. This is gonna be M4 entry. This one is off. M5 is off for now. You can here M1 entry alerts. When it opens a trade, it will send an alert for M1 entry in M1 buy or sell, in M10 buy or sell order block. That is how it alerts you. If maybe you've turned this off here, it won't open a trade, but it will send the alert. If this is off here, trade for me. It's straightforward, isn't it? Trade for me. No. Okay, then I'll just give you alerts, but I won't trade for you. I won't open trades for you. If you've allowed it to open trades for you, it will send alerts. M10. Okay, it will send alerts. And it will open trades. That is if you've enabled these alerts. If you don't want to open trades, turn it off. If you feel like M10 is just a small time frame, you want to go for big time frames, turn it off. M12, 12 minutes, turn it off. 15 minutes. If you are a swinger, you want to hold your trades, you can just turn off the 30 minutes, 20 minutes. When you turn this off, all these ones, they don't matter. This is the main one, the main bracket, the main outline of the whole 20-minute order blocks section. If this one is off, these ones that come below it, they don't matter here. They automatically become gray. They won't appear in the chart. That's the heading column. In the heading block is the main block of the 20-minute order blocks code. So when it's off here, everything here under it doesn't work. Yep, it doesn't work. So when it's on, that is when these ones here, you can turn them on or off depending on your preference. If you want to scalp, I mean, if you want to swing, if you want to open trades that you can hold for like a day or two, you can turn 1 hour order blocks. You can trade, you can look for order blocks from 1 hour up to about 12 hours. It looks for 8 hours, 4 hours, 6 hours, 3 hours, 2 hours, 1 hour. These are big time frames which are less volatile. You know, the good thing about big time frames is you can open a trade now and close it maybe after 2 days with a lot of reward but very small risk. If you want to go for gold, 1 to 20, 1 to 15 risk reward, it's actually, they call it 20 to 1, 15 to 1, 17 to 1, 10 to 1 risk reward. Use big time frames. They are also less volatile in the sense that you don't open many trades in a day, because if you use big time frames, that means you are limiting the number of setups it can open in a day, because it won't be scalping. When you're a swing trader, you can open a trade or two in a day in the same chart again. But when you're scalping, you'll open many trades because you are trading aggressively as a scalper. But since your profit is small, it's risky to scalp, because the stop loss will always be calculated using the 1 minute entry or 2 minute entry or 3 minute entry, but the take profit is calculated using the time frame, like 10 minutes, 12 minutes, 15 minutes, where you had your order block. If it found an order block in a 10-minute time frame, to look for an entry in a 1 minute time frame, and use 10-minute time frame to set the TP using the Fibonacci. So it will calculate the 50% level or the 75% level in the Fibonacci in the 10-minute time frame, where you got your ICT Liquidity Runs setup or SMC OB setup, and then that's where the take profit will be. That's the concept of smart money. That's the concept of smart money, using big time frames, but using big time frames for analysis, but small time frames for entries. Then is the same thing in all the time frames. 1 hour, in the 1 hour time frame, you can look for entries in 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes. I've turned on up to 4 minutes. Oh, when you go down, you can check it. The bigger the time frame, I've allowed 5 minutes, because you can have a lot of movement in the 5 minutes time frame, while at the same time not covering the desired momentum in the 2 hours time frame. That means you can find an entry in the 5 minute time frame and still have a bigger risk reward. You see, when you have like a 4-to-1 or 5-to-1, that is my sweet spot. 5 risk reward, 10 is an overkill, I know, and 20 is damn near impossible. I know it's near impossible, but it's doable when a robot is trading for you, because it will look for an entry in a small time frame. Suppose maybe in a 4-hour order block, it looks for and then it catches an entry with a 1 minute entry. The stop loss will be very tight, and the take profit will be much bigger, because it will set the take profit using the 4 hours analysis, top-down approach, high time frame analysis, and low time frame entries. Okay, now it's the same thing all over again. 5 minute entries, 3 hours order blocks. You see, there's a 4 hours order block section, text label for you to mark them with the text. I left on the retest, entry confirmation and trade is not important. Then M1 entries in 4 hours order blocks, M2 entries, M3 entries, M4 entries, M5 entries. Is entirely up to you which ones you want, but if you are not sure which ones to use the ones that I've turned on here. The only thing you can change is whether you want to scalp or you want to hold. If you want to scalp, you will turn off the big time frame analysis, but daily 12 hours you can turn them off, so that the robot will only open trades in the small time frames analysis, and then hold for just a short period of time, because it will be scalping with like maybe 30 minutes, 20 minutes order blocks. But when I've turned it on like this, it will only mark those order blocks. Or after changing the inputs, you have to change the time frame, and then it reinitializes. It starts marking them over again. You see now it's marked only 15 minutes, 12 minutes. It's a SMC, the SMC order blocks, and then the SMC order blocks, you will see them with lower caps, lowercase text labels. You see M12 by OB, the buy, you can see that's lowercase buy, but the ICT liquidity runs, you'll see them with M10 buy. You see it's uppercase. That one shows what this one is. The ICT is an ICT liquidity run setup where there will be buy and like liquidity here. You see, it's outside liquidity. 30 minutes, 10 minutes. It's all messed up here. You can see there's multiple lows here in multiple time frames. So 5, so outside liquidity M15, M30, M10. You can see this color M10. And then when price breaks below this low here into this one here, that will be a run down the liquidity into an order block and then buy. That is how the market moves. The market always hands stop losses. It runs down liquidity. You see, this is just an example. Liquidity here, break below this. You see, just taps. It runs below this liquidity. This is liquidity here. There are stop losses here for people who bought here. There are stop losses here. The market just touches those stop losses and then goes up. Same thing here, and here, and here. It goes above the liquidity, drops. Goes above the liquidity here into another block, drops. Goes above liquidity here, breaking this here into an order block, drops. But the order blocks will present in different time frames. When you switch a time frame, you'll see or here or here or there or there. There were multiple imbalances. You can see the fair value gaps there, the imbalances where there were order blocks. This is like a liquidity run here, a run below this liquidity here. This is 30-minute chart, by the way. But the robot operates on all time frames. It's up to you which time frame to select. I run below this liquidity here into this order block here. Yes, my robot analyzes exactly like a human being. I know. Just like a human being. Trust me. Runs into the order block here, 30 minutes, and then when price reaches this order block here, it goes to small time frames like 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes, and looks for entries there. That is how it works. Now let's see if there were entries or not. In the 1 minute, you see a low here, we break it. There's no fair value gap here. This one we do not break it, and there's no fair value gap. This one here, this is where there was going to be an entry here. We break it here. Yep, we break up. This is an imbalance here. There's a fair value gap here. I like marking it as gold. I know, because it's gold. Imbalances are gold, bro. And a fair value gap is gold. It's a gold mine. That's where you get money. Touches the fair value gap. Yep, this was gonna be a buy, a loss. Yeah, it's a loss. That's the loss. That's okay. You can't win all the time, right? Yeah. You can't win all the time. So you've lost a trade. Oh, come on. And then going on. This is probably gonna be like another breakout, fair value gap here. That is how sometimes smart money will take multiple entries, and then at the end you end up taking the last entry here. This was gonna be another buy. This was gonna be another buy here, and just runs. If it hits the stop loss will be. Oh, actually, this was gonna be a breakout here. It's actually gonna be a winning trade. And then you see, that's the beauty of smart money. You know what the market is fractal. What's happening in big time frames is happening in the small time frame. So here it will look for a fair value gap. Yes, there's a fair value gap here, got a fair value gap here, got a fair value gap here. It's all imbalance. It's all imbalance. Sometimes it will just touch on this fair value gap here and then go up, or this one, or this one, or fill them all. You'll see it as it's happening. I've seen it multiple times, way too many times. And what I've decided is, when you get a setup and then you get a fair value gap below this, when price touches just the first fair value gap, that's your entry. You don't care where it goes because your stop loss is below this low. Where exactly? Let me show you how this robot calculates the stop loss. Let me show you. It takes this candle here, the lowest candle here. The range of that candle is 20 points. Then it takes it as it is and adds it to below here. From that low, 20 points down. So the stop loss will be at here. 20. Stop loss will be here. Yep. So it will fill the imbalance but not hit your stop loss, and then immediately take off like a jet. Immediately take off. This happens all day, every single day. I know there are losses. This was a loss. This was a losing setup here. Okay, I'm not gonna hide a loss when I see it. This is a losing setup. It's lost. It's hit your stop loss here. You've lost 5% of your account. Here you open a trade, your stop loss is at 5%. It hasn't hit your stop loss here, but you've gained about 30-minute order block, 30 minutes. You see ICT Liquidity Runs. It's a run. There's a liquidity here into the order block. Your take profit, since you broke this one here, that's where your take profit will be. Take profit is at the equilibrium, which is an equilibrium from this high here and this low here. Trust me, I've learned from the best. I have learned from the best. And even if you backtest this strategy real time, as I'm teaching it right now, even if you backtest it, you'll see it works. You see, sometimes it shoots past the equilibrium all the way to the what do you call it? The premium. From the discount all the way to the premium. I don't care where it goes, as long as this is my take profit here at the equilibrium, I'm out. I don't even know whether it might take profit or not, because when my robot trades, I am not watching it 24/7 like a hawk. I've created the robot so that it can trade while I'm doing my stuff over there. I'm not monitoring it, because what's the point of having a robot even though it doesn't, trade automatically? I mean, even though you can get that freedom to watch a trade, so your risk is like 40, 50, 60. Your reward is 100, so that's like 1 to 2, 1 to 1.8, 1 to 1.5. That is how risk reward is flexible. The reward is the take profit is flexible if provided these values here are 0. Where are they? These values here are 0. If it's 1, these values here, your reward will be equal to the stop loss. If stop loss is 50 pips, your take profit will be 50 pips, so it will exit here. If it's 2, your take profit is 100. 3, 150. You will never know where the price will return, where the price will reverse. That is why I just go for the equilibrium on the higher time frame. Sometimes it will be big reward, sometimes it will be small reward. If you want big reward, most times use big time frame analysis. Use daily. Oh no, not daily. Daily is off for the time being. Please don't turn it on unless you want to blow your account. I will fix it. I will fix it. I will fix this one. Don't turn it on for now. I will update when to turn it on. I haven't updated the code. I just coded all the way up to the 12 hours. I know. Why not daily? I will fix that, because daily it ranges. I mean, it trends. When you take a setup with a daily, you are guaranteed to hold it for at least 2 days, swimming in blues and profits. If you are impatient, you will close the trades. Yeah, but I am patient. I can hold a trade for a week. As long as my robot doesn't close the trade, I'm okay. Yeah. So if you want big rewards like 1 to 10, 10 to 1, 10 to 15, other 10 to 1, 12 to 1, 15 to 1, 20 to 1, 5 to 1. 5 to 1 is, it's a sweet spot. That's my preferred risk reward actually. 5 to 1. 5 to 1, 10 to 1. Use big time frames. That is my advice. Now, I haven't touched on this risk reward. I feel like I haven't touched on all of it. But we are done with these order blocks here. It's the same thing all the way down there. That is what all these inputs are about. All this noise here. I've said it. All you have to do is just turn on your the time frame you want to trade with here. On this first draw, higher draw, turn it on or off. Then if it once it draws the order block, that's where it will wait for an entry in that order block. I hope I have explained this in detail. I hope so. I really hope so. Now the risk percentage. Sometimes you'll notice if you have set, the robot will mark the charts, but it will not open trades. This will be the reason here. If your risk is small, if you're like 5% risk on a $10 account, that would be like 50 cents risk. But the stop loss, let me just show you in this example here. In this example here, suppose we open a buy here. And this opening of this candle here, our stop loss, remember it's at that level. I'm going to get to that level, 859. Let me just take 92 and then I can drag it. Our stop loss is here. That is a $5 stop loss. But your risk reward for your 5%, you said you want to risk 5% of your $10 account. 5%, there is 5 over 100. That's 5% either, times $10 account. So that's $0.5. But when the robot was calculating your stop losses, the stop loss was $5. So it will not open a trade because the stop loss is bigger than your risk tolerance, the risk you've allocated to these setups, to the robot. Or you must risk 5% of my account per trade. It won't open a trade. It will only send you signals, or there's a buy setup here, but I can't open it because you don't have enough money. You haven't allowed me to risk $5. This setup will take this setup for you. When you open a trade in this setup, you will be risking $5, considering what the stop loss is. But when I'm looking at these input parameters, you've only allowed me to risk 5% of your account, which is 50 cents, which is $0.5. So I can't open this trade, because if I open that trade and then we go into a loss, you will lose $5, and then you'll be like $5 will be 50% risk. That is not the risk you want here. So it won't open a trade, but yeah, you don't open trades when your account is small and you have this small risk, 5%. If you have a small account, you'll be at a disadvantage because you'll be forced to use like 50% risk reward. When you have a $10 account, you'll have to use at least about 50% or 30% risk reward. Because you see, the stop loss is usually about $5 or $2 is usually the minimum. It's ranging. Let me show you. $2 stop loss. No. The stop loss is usually $2, $4, $1, $0.2 on these small volatilities. Sometimes $0.8, $1. If the stop loss is within your risk, it will open a trade. If it's sometimes you see it's big, $10 stop loss, because as long as it's within your risk percentage, which you set here. My account was at around $200, so it was risking $10, which was 5% of my account. I always use 5% when I'm using big accounts. So it managed, it went on and opened a trade and risked $10, which was 5% of 200. Even though it lost, it didn't actually make a dent on my account balance because I was only risking 5%. See, 0.02, this was a break even. It moved my stop loss to my entry, and then it hit my stop loss here. This was a small stop loss, break even, $4 stop loss. If your risk is below $4, it won't open a trade. That's for sure. Oh, this laptop is hot. Okay, so moving on. $5. Yeah, at least sometimes it will open trades. Most times, volatility 50. Even when you use small accounts, it will open trades. Yeah, see, sometimes it will miss those trades though, if the stop loss is bigger than the allocated risk. Yes, you see, usually this 25s. This one I'm confident. Even when you have a small account, it will open trades in this one. Just make sure you do the math on your own. When you have a $50 account, do the math. Just do the calculations. I want to risk at least. Let me say I want to risk $2 per trade, né? And I have a $50 account. That means I will risk, what the hey, let me say $2 over $50. That is 4%. Times 100. That is 4%. I'll be risking 4% of my free margin. And just write here, I want to risk 4%, and then leave it as it is. Leave it as it is. Even when your account grows, the risk will stay the same. But when the account is bigger, that means it will open more trades, but the risk will stay at 4%. If you increase the risk, yeah, that's at your own discretion, your own risk. Increase the risk. The calculations will remain the same. The analysis will remain the same. The stop losses and the take profits, the analysis, the entries, nothing will change. In summary, you have a strategy which you choose between SMC, ICT, or ICT Liquidity Runs, or you can use both of them at once. Then you have an option to trade for you or not, if you only want to look at the analysis. And we have an option here for when to trade, like from 10 a.m. to 10 p.m. I mean from 10 a.m. to 10 a.m. it's trading the whole day, or from 10 a.m. to from 00 to 10 a.m. or from this is just open from 4 p.m. to 10 a.m. That's the only time it will trade. If you wanted to trade the whole day, make sure the start and the end are equal, are the same, and then you trade the whole day. Then you have risk percentage of free margin, which I just explained right now. If you have a big account, you are free to use small risk. When I have like a $20 account right now, I'm just gonna use risk 25%, which is risking big means your account is very, very prone to blowing. When you have a big risk reward, even 25%, those risks, they are on its own is a big risk, so your account is susceptible to blowing. You might lose all your money. Trading is risky. You have losses, you have wins. Your wins are bigger than your losses. Yeah, but if your trading plan doesn't allow you to take losses, to suffer a few losses without blowing your account, you will never be profitable, because you will lose and keep funding and lose. When you win, you make profit, I know, but when you lose, you will blow your accounts. When you trade, you have to manage your risk properly. That is the first topic every mentor teaches you when you enroll. You have to manage your risk properly. If you want peace of mind, fund a big account, like $100. $100 is a small account, I know. Fund a big account, $200, and set your risk percentage to 2%. Ooh, and watch it as it grows. The frequency in this robot, I know my confidence in it. What I've seen from my experience, 5% risk has given me at least 50% return. I'm going to state that now, the lowest here. The highest, it has given me 100% return in a day, I know, in less than 24 hours, yep, with 5% risk. So when you are patient and you have a big account, and then you just set even 1% risk, when you have $10,000 in your, $1,000 in your account, and set 1% risk, it's risking $10 per trade, and the reward will be 1 to 10, 1 to 5, 5 to 1. It will be like $50 per trade or $100 per trade. That is how you risk, but making sure you make bigger, your reward is bigger than your stop loss. So even your losses, when you suffer losses, your profits will cancel those losses and leave you with a net positive profit. Then moving on, you have break even, which will move your stop loss to entry, or trailing, which will move your stop loss as profit as your trade is going into deep profits towards your take profit. Is to keep protecting your stop. In case when the trade reverses, you don't scratch, you exit with profit. Yeah, they both have advantages and disadvantages, which you will see as you are watching the robot operate. Risk reward here, you set them when you want to have your own fixed risk reward. If you want 1 to 5, set these values to 5. All these zeros, just change them to 1 to 5, 1 to 4, 1 to 3, 1 to 2, 1 to 1. It's entirely up to you. These are the colors, graphics, which will show on the chart here as you change them. The colors that will be used to mark the order blocks and the trend lines and the arrows and stuff. And these are where you feel the order blocks, and this is where you, here the OB section, this is where you choose which order blocks to trade and which ones not to trade, whether you want to hold, whether you want to scalp, or whether you want to swing. And then inside an order block, we have an option for 1 minute entries, 2 minute entries, 3 minute entries. Turn them true or false to enable them or to disable them respectively. That is how this robot, this machine operates. That is one way to operate this machine. Yep, copyright is entirely my robot. Yeah, entirely my robot. But the strategy is entirely, I wouldn't mind if ICT Michael J. Huddleston contacts me and says, bruh, you are using my strategy, but you are not even, you've coded my strategy into a robot and I'm not getting my royalties. If that's the case, I would gladly give him, I would gladly take it down or give him a percentage of the royalties, which I make from the sales of the robot and which I make from the profit I make from the robot. Since he gave this information out for free for us to learn and trade, I believe what we do with the information is entirely up to us. As the good mentor as he is, he gave us the information so that we can use it to our own profit and to our own benefit and make money. How we use that, whether we trade manually or automatically, is entirely up to us. And by the way, we'll be forever grateful for the information he has posted for us for free of charge, which will once you learn how to trade like ICT, like Michael J. Huddleston, the inner circle trader, you will see the market moves not randomly, not coincidentally. It moves as per an algorithm which is driving it. It's always moving. There's always an algorithm which is moving the market, whether it's indices, whether it's forex, whether it's stocks, whether it's commodities. The market is being moved by an algorithm which is hunting for money, which is hunting liquidity. Liquidity is money. Liquidity is money. The market is hunting for liquidity. Liquidity. This is liquidity. We break below this one here into this here. This zone here, we have an order block here. We buy from that liquidity, and then that's our target. The market hunts liquidity. We have a daily, and in this instance, you get something like a run above this liquidity here into an order block here. You see the order block here, this blue candle up here, and then boom, below this 50 Fibonacci here, this level here, that's the equilibrium. That's your take profit. 1 day, 2 days, 3 days, 4 days in the trade. The moment you enter the trade, you just go straight into profits. That is how this market moves. We don't use support and resistance, trend lines. No, we use them. We use the failed resistances to our advantages. In the retail perspective, they are called the failed resistance because the price breaks above them, right? When the price breaks above them, we are looking for an order block. This break above them, this fail that they call the fail, that's what we want. We want them to fail. When they fail, we know we run above or below, we run through a liquidity, and then we have an entry, a setup there, and then we can sell. That is it. That is how this baby works. I hope you will be able to use it as I hope you will be able to use it and be profitable using this robot the same way I am profitable using this robot. I hope it will give you the results you wish for. What I'm confident is, once you study it, you learn it, and you understand its concepts here, and you have your own plan, or you want to scalp, you want to trade small time frames, or you want to trade big time frames, and you stick to that plan, and you have a sound risk management plan, which is not too big. Yeah, you must have. This is big. If ICT Michael J. Huddleston sees that I'm using 5% risk, he can caution me against it because he uses 3% risk. Why 3% maximum? He uses 3% risk maximum I know. That's what he said, I know. Why? Because he has a big account. He risks for 1%, 2% because he has a big account. But since I don't have a much bigger, $100 account is not a big account. If I had $1,000, I would risk 1% of my account. That is how you manage your risk. So in summary, yeah, that is the robot. That is how it works. All you have to do is open a chat. Open the navigator, drag the robot, drop it in the and then inputs. Go through your inputs. Okay. Go to the 1 minute time frame. It operates. Leave the chart in the 1 minute time frame, and then save your template. Okay. Then go to the market watch chart. Then load your template. Leave it in 1 minute, and you are done. Turn on algo trading. Then the robot is on and it's trading for you. Full time 24/7. Thank you for your time. Oh, look at this. This is a setup presenter. You see a breakout here, fair value gap here. It will mark them for you. Run over the liquidity. These are happening all day, every single day. Alright, this is Nzima, Offensive Nzima GPFx, the author of the GPFx SMC EA, the most advanced SMC EA in the market. So far, I have never seen another robot which trades price action like this one. I'm confident in my robot. Yeah, and I hope someone will design a logo for me, by the way. This is Happy signing out. Thank you for your time. Happy trading. Jesus.